So I thank you guys first for organizing it. And then I'm also here, even though as a panelist, to also learn from a lot of the panel member, because I know, sure, these are the kind of conversation that I'm looking forward to. Yeah, thank you.
Thank you so much, Edmond. So let's have your thoughts. Oyekome, let's have your thoughts on this subject matter.
Thank you. Good morning, everybody. Thank you for the invitation to speak here. Like you rightly pointed out, a lot is changing in the tax landscape, which will definitely impact businesses. So it's very, very important that businesses are actually bracing up to respond to some of these changes and take advantage of those changes as it may really apply to them, and possibly avoid sanctions where they could be actually falling short of the law. So that would be my comment for now.
Thank you so much. Spoken like the true taxman. Thank you so much. Okay, so before we leave this open session, let's have the thought of Emmanuel on the same subject matter.
Okay, thank you very much, Anu. I believe everyone can hear me. Thank you so much, Anu, for having me today once again on our webinar. I want to also appreciate every of our panelists that make our time to be part of this conversation. The changing tax space, for me, is not a new thing, because since the introduction of the Finance Act, we've been, seeing changes introduced into the space, through the instrument of the Finance Act. But maybe from where I put it, the tool of the Finance Act, how beautiful that tool is, maybe the way we adopted the use of Finance Act in Nigeria is what may be calling for a need for an holistic, review of the tax space for holistic reforms. If you look at what is happening at other climes, you see that Finance Acts are not frequently used to change tax rates or change tax, tax rates in essence, because you want people to be able to, do business reliably, at least for a period of time before the tax rate begins to change. And again, so you see in other clients, they use Finance Act to provide clarification on gray areas, use Finance Act to improve compliance, use Finance Act to introduce some new, compliance measure that will make for voluntary compliance, and not necessarily using Finance Act to introduce, new taxes, change tax rates, as frequently as we have kind of experienced, in our climate, that then make the environment a bit unpredictable for potential investors. So what I would say is that for me, I would have preferred the instrument of Finance Act and us getting it right going forward. But the tax reform has come and like Edmond rightly mentioned, some set of committee that was led by Mr. Taiwo Idele and some prominent member of the team like Mr. Mike Ango, the current acting FCT IRS chairman, and other people that work on those reforms. They've made proposals to kind of dynamically transform, the tax space, and they've communicated their objective primarily, to make the tax environment more friendly and make the fiscal regime more attractive for potential investors by eliminating a multiplicity of taxes and making compliance easy. Hopefully, when we dive deeper into the conversation, then we are able to look at some of the issues raised by the proposed reforms and then make sense on how we can navigate the environment going forward.
Thank you so much, Emmanuel. Thank you. So I would like to follow up with a question, and I'll be directing that question to Taiwo. And my question this morning is, looking at the different provisions of the Nigerian tax bill, the proposed tax bill, and other allied reforms, do you think that these reforms have been able to capture the different industry peculiarities? Like we said earlier, the fintech, the loan out space, the bad debt issue, and every other issue that we currently see in the tax space have do we see this tax reform actually capturing these spaces that seem not to have been touched before? Appropriate.
Okay, thank you very much, Hannah. So for the loan houses, the peculiarity with them, is based on IFRS 9 and the impairment of receivables. So for them, because of the way they are positioned, most of their loans that are below 12 months are actually maybe non-performing, and they already identify that, but they are unable to classify them beyond stage 1 and 2. So now and then the law says stage 1 and 2 is general, while it's only stage 3 that is what's it called? Specific and deductible for tax purpose. So because of the peculiarity of their industry, most of these loans they don't have collateral, they're not secured. And you see an advert, and that's the selling point, really. You see an advert saying that get a loan in 2 hours, get a loan in 24 hours, all of those things. And then they have exhausted all the means to recover these loans. They will post picture and say it's obituary, it's, all of those things just to get the just to recover the loans, right? And they're unable to. And then at the end of the year, they're saying these debts for tax purposes are bad. And then the taxman is saying, oh, they're still in stage 1 and 2, they're general, and then they are not deductible for tax purpose. Because it's peculiar to that industry, the tax reform bill has not yet addressed that. So at this point, it's yet to be addressed, but it's really unfortunate that these loans that they know that they are bad and most likely not recoverable, they're unable to take their tax advantage in that year until it gets to a stage 3. When they reevaluate, eventually they will then but they're having to part with cash. They're having to pay cash tax now. Of course, it will create a different tax asset for them, but they're having to pay cash now. So the reform has not yet addressed that. And since the implementation of IFRS 9, this issue has been lingering. People have raised it. Sadly, it's yet to be addressed.
Wow. Thank you so much for taking us through, the journey of, the history and why we currently have what we have in place. And also that reminder that that industry are still not holistically addressed. So while I'm still on, this same subject matter, I would just, like to ask a different question, but in another light. And I would still be directing that question again to you, Taiwo. And my question is, the way the proposed reform has introduced tax exemptions on compensation of loss of employment, which is up to 50 million. What do you think are key benefits of this provision and how they will impact both the employers and the employees? And this is also still looking at a particular sector that's, the peculiarity of compensation of loss for employment as well. So what are key benefits of the provision of the reform bills and how they will impact both the employer and the employee?
Okay, so thank you very much, Anu. So for the tax exemption that they now have for compensation for loss of office, right? It used to be 10 million, now is now 50, meaning that people who earn below 50 million, are still exempt from paying taxes on it. Now, people who earn above 50 million would pay tax on it, CGT, and the unfortunate thing is that CGT rate is now matching CIT rates. So I don't know if the final bill that will be signed will be 30% for CIT or it's going to be reduced to 27.5. So whatever the rate is, they now have to pay this. So for people who earn lower than 50, of course, it's good news for them. It's happy days. Or they don't have to they will not be liable to CGT on compensation of loss of office. But for those who earn above that are now going to have to pay more, which literally maybe speaks to our own progressive way of taxation in Nigeria, but the rate is now higher. No implication for the employer. The employer just has to ensure that it complies. The employer just has to deduct the applicable tax rate and remit. So that's it.
Wow. Wow. Thank you so much, Sarah. Thank you so much. Before we leave the same question, I don't know if any of our panelists would like to add their thoughts on the same question. Okay. So I believe that we have
Okay, I know.
Okay.
I know. Can you hear me?
Yes, I can hear you now.
Yeah, thank you. I think Taiwo was just trying to package the reality, you understand, in that sense. But for me, two things that Taiwo has mentioned is that first, I think it is not too late, although the bills are already on the floor of the Senate and they are about to wrap up the legislative process of getting it, passed and then subsequently ratified by the president. I actually think some of these industry concerns that are just raised are, germane enough for sustainability. We liaise with these people, and the truth is that our tax laws in the past have not been able to, evolve to capture some of the recent or emerging industries that we are currently having, especially in the fintech space, the technology space, and all that. So the reality of this business, our tax law is not really, updated to see to it that those businesses are able to operate, very viably. And if it doesn't go with this version, maybe in the future, if you're going to have a finance act subsequent to this tax reform, I think that is one of the front burner issue that industry needs to put forward. We have a lot of them, and when it comes to financial inclusion in Nigeria, these are the guys that have been the front runner to see to it that businesses are able to, continue to get constant loan, notwithstanding the fact that they are not able to bring forward, the traditional requirement from the traditional banks, And also the issue of the compensation on loss of office. I think it's already bad enough that somebody is losing his office. You understand what I'm trying to say? It's already bad enough that somebody is losing his office and you are not even sure of what the future holds for that. I'm a bit sure whether it is very people-centric for us to increase the tax rate away from, the 10% CGT that typically applied prior to now, and then such person may then be suffering something in the range of 30% or whatever is applicable if eventually passed. So those are my thoughts, on that. I can see Oyekomi hands raised already, That's the beauty of a roundtable conversation.
Okay.
Yeah.
Thank you. I just wanted to comment on the. So my comment is just with respect to that of the loan houses, and there are rules to doing businesses, and each business has its own peculiarity. If you must do a business of a finance house, there are considerations you should give into your customers. For instance, now somebody is here to obtain a loan from you. Yeah, the traditional requirement will be that you provide collateral. But aside that collateral provision, there's a credit rating analysis on the borrower. So if you had not gone through all of this process, you had given out fund, and the loan is coming and is crystallized. I mean, the bad debt is crystallizing. It becomes a question of whether this should be accepted or allowed for tax deduction. Generally, even the new tax bill made provisions. He said when there are bad debts within the course of the business, these bad debts must be accepted for tax deduction. Good and fine. However, in the case of a doubtful debt, so long these things are estimated in accordance with generally acceptable accounting practice, so meaning that there should be an handshake between IFRS 9 like Taiwo pointed out, and rating of your client, and this debt is becoming crystallized eventually, and you want to expense this into the book. Now we want to look at the effort you had actually put in to recover this fund. How reasonable is it? How bad is this debt in the real sense? Is it really doubtful? If it is doubtful, to what extent is it doubtful? So there has to be an handshake between IFRS 9, the law, and the due diligence that needs to be done by the loan houses themselves before they grant this debt or the loan to their customer.
Okay, thank you so much for coming. I believe from the floor here and from the house, from the general populace, I believe there might be answers to this, which is a bit of question and answer, which is okay. How much are these loan assets required to do to actually meet the provisions of the law, so that there would be this handshake? How much are they required to do? How well are they meant to pursue this debts that do not have collateral, knowing that some of they are not secure, they do not have collaterals. So this is like we are grateful that it's a discussion, and even for me, I'm seeing that someone is saying how are these loan sharks companies registered with NDIC to operate legally in Nigeria? So somebody's of the concern that are they registered legally? But even aside registration, or maybe if they are not registered, of course they won't be in the in that industry to play. That's one thing that is very, very sure. But aside the registration to actually play in that field, the question being addressed this morning is how the tax treatment that is being given, the tax treatment and provisions that is being given to entities in this industry, and how does the tax law look at their bad debts, their loan classifications? That is what is of so much concern, because that deals with their impairment, deals with their provisions that they have in their books. Okay, so I believe we have been able to touch on that question, and I don't know if we have anyone wants to speak to it, or Emmanuel still wants to say something to it. That's the beauty of a discussion, actually.
So, sorry, I just want to add a thought to the question on whether they are registered as loan with NDIC. I think NDIC is Nigerian Deposit Insurance Company. I think it's only those that takes deposits, that have the requirements to register with NDIC. So if you are purely a loan house and you don't have a banking license, whether as a microfinance house or that can accept deposits, you may not have that obligation. So basically, loan house operates as a lending house, sourcing loans from different angles and maximizing the opportunity in market to earn spread, and notwithstanding, that even the populace are encouraged to see to it that if you must take loan from any loan house, it's actually one that is duly registered, and have some form of a regulatory oversight that you are patronizing. I can see Taiwo's hand raised, let's hear from her also.
Yes, so I just wanted to say that at what point, because I know Oyekomi said something about having to prove that you actually made efforts to recover these debts. These debts when you look at each unit of the loans, right, they're usually very small. They are not a lot. It's when you bring them together that you now have the huge amount that is outstanding. Sometimes the cost of even trying to recoup the loan may be more than what you're trying to recoup. So at some point, you have to also do some cost benefit analysis, because we already know how they'll send you a message and say, if this person is your family member, tell him that he has done this, all of those. They try to maybe embarrass and all of those things. On collateral, right? The reason why the business is thriving really is because there's no requirement for collateral. That's the marketing strategy. They're saying that get a loan in 2 hours, no collateral required. That's what is encouraging people to do it. Yes, they already know that there's a risk to it, which is why the interest is really, really high. I don't know what the interest rate is, but I know that the interest is also really, really high. But how can they then prove to the revenue authorities that they made all efforts to recoup this amount, when at a point they have to take some business decision to say, okay, anything below this threshold, I think we should just stop pushing.
Oh, okay. Maybe
Can
we
you
can
hear
just
me?
move to the next. Oh, we can hear you now. Go ahead.
Okay. So everything really actually sits around documentation majorly. You need to document the reasonable effort you have made in recovering this debt. Yes, in Nigeria, I'm not sure there are debt buying houses that would take up this debt and help you to recover them, just like we have in the banking sector, when the banking sector was having issues at the point, and what do we call this agency that was set up by the government, who took up the debt of those?
AMCON.
Yes, AMCON, thank you. AMCON took up the debt. So are there efforts like that? Yes, I'm not talking necessarily by AMCON, but debt buying houses whom they have engaged, or debt recovery agents that they have engaged to actually help to recover this debt. You need to prove that you have really tried your reasonable effort to recover this debt. If you are not able to prove that, then you know what you had gone into right from time at the inception of the business. You had not secured, you had not do proper rating, so you cannot just expense this. There has to be a handshake. Like I said, reasonable effort must be proven.
Okay, thank you so much. Thank you for that. Thank you for that reminder that borders and documentation and proof to show the efforts that has been taken by the entity to actually recover the loan at every required measure. Thank you so much. Okay, so I would like us to move to another question, and I would be directing this question to Emmanuel. Yes. So I want to ask about the tax reform. The tax reform bill environment has been evolving, like we've all said, we've all jointly said earlier. And with the introduction of the Finance Act, however, it is believed that the Finance Act may, potentially pause, and this is what, Emmanuel had addressed, that the Finance Act, has been in play, also as the tax reform bill has, now in play. But we also want to just get a bit of clarification that given the country's history on tax policy changes, the Finance Act and other statutory provisions, do you think that it's realistically achievable that the tax reform bills are actually here? Yes. And do you think it's going to be something of a good reality, or maybe of a practical thing for us in Nigeria to be able to enforce the provisions of these reforms actually?
Okay, thank you very much, Anolwako. Please confirm if you can hear me. Can you hear me?
Yes, I can.
Okay, thank you very much. I actually want to believe, that the tax reform bills are coming as a major intrusion into the tax space to reposition the Nigerian tax space to better align with global standard, and subsequently, issues around the tax environment may or should be addressed with the instruments of the Finance Act going forward. What I've also seen that they're trying to do is to introduce some level of a long-term, sense that, a proposal around CIT reducing over the years, and then VAT increasing over the years, and although the legislative arm has now, made decision against the VAT increasing over the years and all that. So what they've also done maybe in the next 3 to 5 years, to give some level of predictability, to the tax environment, they've incorporated those provisions in the tax reform bills. But subsequently, I don't think it is over for Finance Act yet, because there is no singular reforms that can fix all issues. You understand? No matter how smart the government is, taxpayers can also be, smarter, and loopholes will also come with emerging business, emerging industries, and all that. So I still see room for the Finance Act in the future, but I just believe that this tax reform is coming as an intrusion to get the Nigerian tax landscape to align better with the global practices.
That's a very good one. Thank you so much, Emmanuel. I'll be going to Edmond, and owing to the fact that we have established, via our discussion, the essence of the tax reform bills and what we should be expecting. I would like to ask Edmond, how do you think this new tax reform would impact, the manufacturing space, particularly in terms of production costs and operational expenses? How do you think that this reform will affect the manufacturing space?
Okay, thank you very much. I see that you've touched a lot of it. Emmanuel also mentioned some of the changes that have been made. It is generally believed that these changes should ordinarily help in the reduction of costs for manufacturing companies. For example, one of the areas that is deemed to be beneficial to the manufacturing company is when it comes now to impute VAT claim, right? Before, the impute VAT that could be claimed are just items that you purchase for resale or what they call stock in trade that you use to manufacture other things that you resell. So a lot of time for people like Taiwo in manufacturing, this is one area that there's always issues with the tax authority, because then in manufacturing, apart from the raw material, which are a significant component, you also have machineries, right? These machineries are like also very, very heavy in terms of cost, and most of this machinery also come with VAT at the point of purchase. But you are not able to claim the impute VAT on this because they are not items that you bought to resell or to manufacture what you resell. But now with the new proposed VAT law, what you have under impute VAT is that you are able to claim the VAT you paid for all of these things. You're able to claim them back under the output. So which means your cost should reduce ordinarily, right? Even though initially there was the fear that the VAT rate was going to increase, which the House of Rep now have said should stay at 7.5. But this is one area of a win-win, right? Then if you also look at what Taiwo basically said during one of the sessions, his projection is that there should be at least about 3.3% savings for manufacturers, because now a lot of some of the input you have, because they're also basic raw material, they could be exempt and all of that. But again, it all depends on the type of manufacturing company. You mentioned about the potential that there could be increase in personal income tax for high income earners, right? Then most manufacturing companies in their own employment, they have expatriates. Most times, these expatriates in Nigeria, their remuneration or their salaries are negotiated net of tax. So which means if there are additional tax burden because they earn high salary, obviously, which is the attraction for them to Nigeria, the employer will have to pay all of this again, right? So this is also something you have to consider. If you also have even local people that are earning very well, again, you want to manage for them the impact of the tax. It's very likely that their salary is going to net salary, because all of us, we think of what gets into our pocket, right? It's going to reduce. So the net salary will reduce. Again, as an employer, do you want to look at maybe salary adjustments? All of this could increase cost. So at the end of the day, it depends on the balancing of how much are you able to save in being able to claim more input VAT, and in these other costs that are also increasing. Also remember, the tax rate itself, the company income tax rate, the proposal is that it's going to reduce, yeah, from 30% to 27.5. This is also a sort of savings in terms of operational costs, because tax is also part of those costs that the manufacturer has to bear. At the end of the day, we really want to see how this play out. Like everyone has mentioned, we have not seen the final. So again, the Senate has not yet passed it. So there could be some amendment before the assent by the president. But in all, the aim of the committee, the aim of the exercise is that companies should be better off, should benefit more from this exercise than having more tax burden from it. Yeah?
Thank you so much, Edmond. Thank you so much. I'll still be, related the same question to Taiwo, but I also want to bring it from another dimension as well. You mentioned claiming of tax credits for VAT paid on, for VAT paid basically. So I would like to ask Taiwo that do you think this is actually, going to be as effective as the tax reform is making it seem? Do you think it's practically looking at the history that we have, the historical challenge that taxpayers normally have when it comes to tax reform, tax credit, and other allied matters related to that particular subject? Do you think it's as juicy, as rosy as the reform is presenting it? That's my question actually.
Tax reform.
Yes.
I would love to see it happen, really. So, of course, the law is there. There's going to be a faster reform. But I also know that what they have agreed is, oh, well, if you are asking for a refund, you get it. However, if you have wrongly applied for a refund, you also bear the brunt of it. So, at the beginning of the whole tax reforms bill discussion, I think everybody was just shouting or clamoring for FRS here always willing, or any revenue authority, to claim, what's it called, to charge interest on unpaid taxes. What of my own cash that you're holding on to for years? There are businesses that are liable to withholding tax, for instance, and they're never going to be able to claim those withholding tax as credits because of the nature of their business. The markup on their costs, is lower than what people have had to
The
deduct from their
withholding tax
invoices. So
rates,
they're perpetually going to be in a withholding tax credit position. So for those individuals, how do they get their money back? And then when you say you want to do a tax refund exercise, FRS will say that they want to come and carry out an investigation, and then the investigation will last forever. It will not end, So looking at what we now have, where you can claim a refund, and then they will do what's called maybe an investigation afterwards. I'm very, very open to see it happen. I will not say that I don't believe it will work that way, but personal opinion, I would really, really like to see it work out.
Okay, thank you so much for that time. Okay, so I'll be directing the same question to Oyekomi, knowing that Oyekomi is here representing himself in his own capacity and not the whole of the FIRS. I would still like to direct that question to him as an expert in the field. Let's say VAT refund generally for different industries has not been the best experience. And if the provisions of the reform this time around is assuring us, bringing it back again to the light, just making it more obvious to us that on this particular transactions, there are credits for you and then reforms are still available for you to enjoy. What are the things that the FIS is putting in place? Maybe if you have, you could just share with us if there are things that are being put in place or things that that, oh, this is actually already in play. Maybe it was not known to the public to ensure that the refund process is seamless for taxpayers. This is something that would really encourage them, particularly people in the entities in the industry that are more affected. So we'd like to hear from you.
Okay, thank you, Anolu Akwa, and thank you for that caveat you have put out. I'm here in my personal capacity, not representing FIRS. And responding to the question, like Taiwo rightly said, audits might take a lengthy period as we have it today. But with the coming of the new tax act, hopefully by the time it's assented to, we expect that it will take a shorter period, because if you look at it is actually mandated that the refund be made within 30 days. So if the refund has to be made within 30 days, then the responsibility is both on the taxpayer and the tax on the accountant general has been mandated to have dedicated accounts into which monies meant for refund are maintained. Also, on the part of the tax administration, we are deploying out an electronic fiscal system that we expect that businesses will adopt. Because why do we have a lengthy period when we're doing some of these audits? Sometimes the problem also sits on the taxpayer. I'm asking for this documentation, you are delaying, you're asking for extension. But if you adopt this electronic fiscal system, it is expected that your record keeping are seamless and are efficient in such a way that by the time I'm requesting you for particular information, you're able to dole them out within a short period as reasonable for you. So it is expected that taxpayers actually adopt this electronic fiscal system so that the FRS on its own side also can also meet up with this 30 days deadline that the law has actually prescribed. Are we saying there's not going to be an audit? I'm not sure the law has said whether yes or no to that. However, what I know is there will definitely be a review. Nobody will just release money back to a taxpayer without doing it further due diligence on the claim that has been made. So there will definitely be a review. So documents should be made available as soon as requested by the tax authority. I would want to leave it as that, at that.
Okay, thank you so much. Thank you so much for that
Okay,
information.
let me just, I know if I can just add a thought on what Oyekami had said. You know, it is actually worthy of having these thoughts, in the sense that I recall when the Nigerian transfer pricing regulation came out, sometimes in 2012 or even 2018. You know, the regulation has the provision of the APA, and you know, we had some taxpayers approach the tax authority to say, you know, can we do APA then before the eventual launch of the guidelines? You know, and the tax authority would say, oh, no, we are yet to implement this APA because we are not fully ready, you know, for administratively for it. You understand? And what I would love for Oyekami to actually help us, because the proposal in the tax reform bill is clear. After a refund is made, the FRS has 30 days to make it available without an audit. You understand? You know, that is the express proposal, you know, in the tax reform bill. And what exactly is do you have any inclination on what the tax authority is doing electronically, you know, that will make us not have similar experience to say, even after the president has assented this and people wants to apply for refund and we are still waiting for FRS to deploy the portal or to deploy the technology or to conclude on how it's going to work? Is there anything that gives us that comfort that, you know, as soon as this thing goes live upon assent by the president, you know, then we will be able to get these provisions on track? I don't know if Oyekami has any thought on that.
Yes, with respect to that electronic fiscal system, okay, let me say, before I go to the electronic fiscal system, I want to respond to your claim on the APA issue. You know, then when TP came on board in 2012, capacity had really not been gained by most of the employees or the transfer pricing officer as of that time. So it will be very, very hazardous, or let me say, it will be costing us so much if we go on and agree in advance to what we really don't have the capacity to deal with. And that was why we say, okay, no, APA was not going to be entertained at that point in time. But you agree with me at this time now, transfer pricing has matured in Nigeria, the officer has skilled and experience, so APA can be dealt with as we have it now. Now, going back to the electronic fiscal system that we're talking about, as it is today, the FRS is currently doing a trial run with some large taxpayers. So we are currently deploying that with some large taxpayers. Sensitizations are going on. Accreditations are also going on for system integrators that will be involved with most of these taxpayers by the time they are adopting the electronic fiscal system. And the further thing is, most of these integrators also are expected also to have proper certification, even as it relates to data privacy. So issues of data privacy are also taken care of, because these guys must be approved by the Nigerian Data Protection Commission also as well. So the EFS is ongoing. The FRS, I'm not sure the FRS will backtrack on that at the time the bill is actually assented to. So we should just be optimistic about the implementation.
Okay, thank you so much. Thank you. Okay, so you know, right on this call, it makes one feel like everything is in order, everything is about to be set appropriately to ensure that both the taxpayer and the taxman are in the right space to ensure that the refund is seamless, and to ensure that that process is not going to be too much of an hassle for the taxpayer, which also includes the record keeping of both the the taxman and the taxpayer. Okay, so moving to another question that we have in the house, I'll be directing this question to Emmanuel, and my question goes thus. So the proposed tax reform exempts, small businesses with annual revenue of 50 million or less from paying CIT and withholding tax. While this is a commendable move to support businesses and address inflationary pressures, is this a strategic decision given, the Nigeria's current economic reality? So, we have spoken about the incentives to be enjoyed by different sectors. We are also still looking at this class and this size of business to say that is this a very good move, looking at our economic state in Nigeria.
Yeah, thank you very much. I think that is pretty commendable in the sense that, looking at the fiscal environment in Nigeria, doing businesses in Nigeria itself is pretty tough. Not to now talk of those guys at the MSME level, that are trying to hang their head over there, So a proposal relieving them of the CIT obligation and maybe obligation to withhold taxes from their, vendors, I think maybe a good one, is obviously a good one in the sense that we want to encourage our businesses to thrive and survive in our environment before we start, taxing them. Maybe a question that will be on the table is that how quickly do these SME get to the 50 million threshold? You understand? Maybe some FME would have said, okay, maybe 100 million captures it more for me to really stabilize and get my act together before I start, contributing to the tax net. But I think starting from the 50 million threshold, I think is something to look at. But I will not but also say to it that, for the businesses that are already doing above that threshold, that seems the government wants to focus attention on for the purpose of, eliminating multiplicity of taxes and possibly, supporting them to also thrive. In the past, we've seen instances where these people faces multiple, compliance issues and audits, from the same tax office. In fact, as a consultant, at times I had to write to some department in FIRS for administrative intervention because multiple departments are just coming from the same taxpayer, on most likely the same issue, you understand? And for us to really get our tax environment to where we want it to be, I don't think putting pressure on existing compliant businesses is the way to go, but rather, trying to, expand the base and capture more businesses into the tax net. If you look at the CAC register as at today, you will see that the number of people in the tax net is a far cry from the number of companies, in the CAC database. Are we saying that all these businesses are alive? Even if you put it to say only 20% of what we have in our CAC website is active business and thriving, I think it's still a far cry from what we are doing from our tax space. And any reforms that is coming must have a clear strategy, on how to bring more people into the tax net, and the only viable way that we can improve our tax to GDP ratio of going back to the same people on multiple issues, multiple cases. Well, it definitely happen. We become investors. There will be investment apathy in the environment, and we may not be able to get it.
Oh, thank you so much. Thank you, Emmanuel. So I've been answered that question. I want to take us to the personal income tax and the withholding tax as the proposed reforms are provided. So I will be starting with the personal income tax, which everyone is talking about. Okay, increasing from a threshold to another threshold. Talking about the CRE and some other aspects of it. So the proposed tax reform bill has introduced a progressive tax band that exempts low-income earners such as maybe employees with a taxable income of 800,000 naira, looking at our current economy. And this provides additional relief, just the same way we spoke about small businesses now. So for individuals, majorly, this provides additional relief through, measures like rent relief and streamlining written claims. So some persons believe that this thought would have, would have been better if maybe some persons believe maybe if this amount was maybe increased, or maybe some more reliefs are brought into, into play. While some very faction believe that this might not really change a lot for some persons. this might not really change a lot. And we also have a faction that believes that, oh, as much as this relief is coming, it seems as if the person higher is going to be bearing the, the brunt of paying so much taxes. But what's your opinion, in line with this this particular provision, speaking to the CRA and speaking to the bad threshold of the PIT that we are currently proposing?
Who is responding to this?
Oh, I addressed it to you, Manuel. Oh, I'm sorry you didn't hear that.
Oh, okay, thank you. Thank you. But we have PIT experts here,
Yes,
that can
I'm
do a
going to
better
them.
job. Hopefully we'll get there. But let me put my few thoughts on that. While the optics of the reform looks very good, I think the practicality of the reforms is the challenge. Do you understand? And maybe a better job would have been done on agreeing, the demography of the masses, to better know the set of people that you want to give this relief to. If you look at the amounts that you speak to, I think there's no middle class, even lower middle class Nigerian that earns 1 million or 800,000 naira per annum. Do you understand? So who is going to really get these benefits? Most likely those people that are not currently in the tax net. Likely the informal sector, people selling something, somebody in the tax room. But what has effectively happened, by removing all those area and all that, is that the middle class that are already struggling to make ends meet are going to be taxed more. You understand? Because their salary obviously did not fall into that category. You understand? And when you put this computation into Excel sheets, that is when you begin to know that, although the optics when the reforms came up stage looks good, but employers need to really start engaging their staff to say, if these things pull through, you may have to start paying more, although your salary has not has not increased. You understand, as the case may be. So, but I will leave it to those people that are more, engaged with the employees on this matter, and what they are thinking about how, that proposed reform is going to really affect their employees. That's my initial thought on it.
Okay, thank you, Manuel. I'll be addressing this question, to everyone on the call right now. But first of all, I want to address it to Edmond to say, what's your take on this? What's your opinion on the impact of that provision?
Okay, so I can start. Ima was talking about consultation, having like demography. Actually, the committee said they actually did this. According to the committee, it is just only about 10% of the population of Nigeria that earn more than 100,000 per month. So it is the likes of Ima, maybe me and you and the likes. But according
maybe the likes of Emmanuel and Taiwo.
According to them, 90% of the population actually earns less than 100,000 per month. So that is why to them, they felt this threshold of exemption was fair, because that is where we really have a lot of the people that are suffering. With this exemption, what they have done now, if you have if you earn taxable income of 800,000, you are also free. Then they also granted 20% of your rent, or 200,000, whichever is lower. So in this case, effectively, you are going to get 1 million tax free. This is good for lower people, like you said, because again, most people that earn above 30,000 before, which was the old minimum wage, they were still paying some taxes as at now, but it then means that they are really out of the tax net if you earn below 70 and all of that. The problem then lies for the subsequent band, where most people come in, which is the middle level. Before we have the 7% band, 11%, before 15, 19, 21 and 24. Now there is a high jump to 15%. Yeah, again, maybe this is where the impact is going to really be high, even though now before the highest tax band, which was 24%, start from when you earn above 3.2 million taxable. There is a sort of like high gap before you get to 25 now, which is the highest. The 23 band, if I recall, has about 25 million within it. So somehow the government will get more tax, the middle people will get more tax more. But when it comes to taxation, you have to check the benefit for the greater population. And in this case, what they have done is that if 90% is going to benefit from this tax refund, then it is okay. If the higher people, especially those that earn above 50 million, have to pay a higher tax of 25% instead of the normal 24% that they were getting consolidated relief allowance on, maybe they think it is okay. All of this will boil down again to the employer. So that is why what Imam mentioned, it is highly important that every employer should already be sensitizing their people on the impact this will have. It is good that your employees should know that without changing their gross salary, they are going to receive less. So you as an employer, you then need to think what type of employer you are, the one who bears burden on behalf of your employee, or the employer who is also affected by all of this. So if you are the type that bears the burden, then probably you need to do some adjustment, making sure that people don't earn less than what they were earning before. So I think both as an employee, as an employer, this is one area that we really need to think about because it could have significant impacts, right?
Oh, wow. Okay, thank you so much. Like I said, this is going to go round, and I would like to hear Taiwo's opinion on this.
I
Thank you.
would like to.
Oh, okay, okay. Okay, let's have you.
Okay, okay. Because for me, I want to differ a little actually. Because when this bill became a public document, one of the very first thing I did was to test the impact on me. What is in it for me? And because I would also categorize myself as one of those guys in that middle class bracket. And by the time I did the analysis,
Maybe you are upper middle class now. It doesn't
I was
it's
about
lower
to say,
middle class we
maybe
are
I got
talking
the top
about.
middle class.
so my response will tell you where I fall into. My response will tell you. So when I ran this analysis, I actually discovered that the middle class is somewhat indifferent to the changes in this new tax law. And in fact, using indifferent is like trying to say there is no change. But majorly what I have seen is that there is actually a marginal reduction in the taxes that the middle class will be suffering. I try to flex that further to see, okay, what is even the definition of a middle class? AFDB defines a middle class as somebody earning between $2 to $20. If you run that for a year, $2 for a year is like around 1,095,000, right? And already somebody who was even on this band, if you run that on the old scale, this person would have been paying like around 46,000 naira. But even in this new law, based on the exemption of the 800,000, the rent relief, that person will not suffer any tax. If you go to that upper band again, which is about $20 per day, and you flex that for a year, this person would have actually been suffering about 1.56 in the old law. And currently in the new law, he will now be suffering like around 1.512. So you can see like there's like a 50,000 naira reduction in the tax exposure of that person. We can also individually run this analysis. There's a link on the
Yeah, I was
website
about
of
to
the
ask you
fiscal
for your
committee.
template so that maybe I punch my number into it.
So we can all punch our
Yeah,
numbers there. Yes, but we should
I think
also bear in
Taiwo had
mind that
something to
this
say on that. Yeah. Okay,
okay, so I just
conclude.
want to finish up. We should also bear in mind that this will also vary based on the consideration of pension, your national housing fund contribution, insurance, and the likes. So majorly it's just the upper class that will really suffer a little more.
Okay, so we have established that
Maybe
it's
like you said, the definition of middle class is highly important
Yes.
saying this
yeah.
because if we assume people that earn averagely maybe 1 million per month, based on this your analysis, I'm sure that they are not among those that you say they are better off, right?
So 1 million per month is still better off. It's still better off with like about 50,000 naira difference. Because where I even notice the significant change is from the moment you begin to earn up to 26 million per annum. Once you exceed that 25 million threshold, 25 million mark, then you begin to notice a higher increase.
Thank you so much. Let's have your opinion, Taiwo.
Okay, thank you. So I actually align with Komi's position, because when it came out, I also went to my Excel and I wanted to check, and I saw that my tax was actually lower, and it is the high income earners like Edmond and Emmanuel that will actually have to pay more taxes, So it's actually lower
Where did you
because
get that data from?
because the bands are wider, right? So the rate is increasing, but the bands are also very wide. So, but the concern that I have is really on the rent. If I'm going to give relief based on a percentage of rents in an organization where I have over 1,000, 1,500 employees, are they all going to bring their rent receipts for HR to program, them for this relief, or they're just going to take 200,000 naira and move on? And we all know what rent in Nigeria is today. So that's really, really of concern to me. And then when the revenue authorities come to do an audit, are they also going to then start asking? Because we're always going to have a difference if we're going to go the route of rent receipt or rent agreement, whatever it is. It's just a whole pile load of documents. I really don't know how that is supposed to work in terms of practicality.
Taiwo, if I can add to that concern, because that clause itself then become a planning tool. You understand? It become a tax planning tool, in the sense that my landlord is not your landlord. We could be in the same neighborhood, and I claim that your landlord is more greedy than mine, and that's why my rent receipt is that high. You understand? So the question is, will the tax authority have a way of verifying rent? Maybe they are going to be asking the taxpayer for their contact of their landlord to verify their rent, or whatever is built into the
the
computation
amount
then
is so
become fine.
immaterial. I think that is why the tax authority have also set it at a very low amount, right? 200,000 naira or 20%, whichever is low. I'm sure that no tax authority will waste time. How much tax will he get from the difference between your rent
Edward,
and
if my
200,000?
annual gross is 10 million, and somehow, somewhere, I have somebody sponsoring my rent, but my rent is also 10 million, and I bring my rent receipt, will you say you won't?
Okay, it's
you won't
No, what
lower.
they are saying, so
It's
it is
lower.
lower of
Okay,
200,000
of
or
200,000,
20% of
and
your. So in
okay,
this case, so
okay.
the money is so low, so
So
they
everybody
don't.
should just claim 200,000 naira and move on.
I'll move on. Yeah. Okay, great.
And
Oh, you
one more
coming
thing I
back?
would want to say about that is the fact that when the bill is eventually assented to, some of these little gray areas would actually be clarified by both the tax authority and the joint tax board, as much as it extends to both the federal and the state together. For instance, on this issue of personal income tax, definitely issues causing confusion will be clarified by the joint tax board alongside the tax authority. So I think we should just let things be as they are for now, and we'll move ahead.
Okay, thank you so much. Thank you, everyone. So before we go to personally contentious matter to me, which is the withholding tax e-invoicing, I want to ask our panelists, just like as a question that we received, when somebody's asking that, what does NGO companies, that's non-governmental organizations, stand to gain with the tax reform? So maybe the person thinks, oh, we've not touched that area. So what are they what are they gaining? So I'll be directing that question to Taiwo before we move on to withholding tax.
Okay, so I know that there's this economic incentive provision, that extends to the companies in these organizations in these categories, right? And then they're exempt from taxes, subject to what's it called? Approved activities. So if you have an NGO doing a particular thing and then somehow you're running a business on the side, you're making money from that, of course, that portion that is not within that approved activities will be liable to tax. And that also extends to the disposal of assets, the chargeable gains on it. If you dispose the NGO's assets and you utilize the capital gains to your approved activities, you don't have to pay CGT. But if you then utilize that gain to something else that is not approved, of course you pay CGT. So anything that is not approved, if you're acting within the confines of what you have approval for as an NGO, of course you're exempt from taxes, but you have to still file your returns. You still have an obligation to file, and you know that the what's it called, penalty for not filing, has also then increased. So you have to file your returns. If you do anything within the approved activities, you're exempt. But anything outside of that, you'll be treated as a regular company.
Okay, thank you so much. Thank you for that information, Taiwo. So going to the withholding tax invoicing that the FIS has recently brought on board to ensure that the provisions of the deduction at source of withholding tax regulations is implemented. We want to know really that how is this supposed to really work? Yes, we know that the invoicing has come to play to ensure that there's a structure, but practically between the vendor and the purchaser, between the customer and
Is another one still there? Is another one still there?
Maybe probably you can start while she tried to come in. She was asking
To
about
come back.
basically
So
this.
I think what she was trying to ask is the
can we
requirement
still hear me,
for
please?
taxpayer to now issue withholding tax receipts, to their
Yes, can we still hear
vendors.
me?
Okay, go ahead now, please.
Oh, my apologies. My apologies. Can you hear me now?
Yes, I know we can hear
Yes, we
you.
can. Yes, we can.
Okay, and while you're trying to sort that, let me just stand in, so we can buy some time. We're already running late on this webinar. So I think what he was trying to check, if I can quickly check with Taiwo, how have you been doing it, knowing fully well that the withholding tax regulation is now in force, from the 1st of January, and there's a requirement for you to issue withholding tax receipt to your vendor, whether upon booking or remitting, how has it been playing out at your end?
Okay, so I'm not representing my organization here, and I'll share.
And also, don't shy away from speaking to the administrative burden.
It's rather, that's my first takeaway from this. And then the second thing is I don't see, I struggled with, I think that's the only part of the withholding tax regulation that I struggled with the end game of what relevance is it? Because if I deduct withholding tax from corporate entities and I want to remit it to the FIRS, I'm required to upload a schedule that has their TIN. And when I upload that schedule, they all get credits. It shows on their own tax pro max credits, withholding tax credit status, So why or what use is issuing an invoice? Now, for LIRS, I would expect that, Lagos State would have also leveraged what the FIRS is doing with withholding tax, because for payee, when you want to remit, you also upload a schedule, you put your the employee's payer ID, and they all get notified. Oh, Cardinal Partners has remitted payee for you. Everybody gets notification. And then they're unable to do the same thing for withholding tax. The bankers still have to issue the receipts. Now, asking me to issue receipts for maybe 1,000 vendors in a month is unreasonable and is of no use, completely of no use, because if in the event that maybe the person doesn't even have a TIN, the withholding tax regulation has said that for people that don't have TIN, I should do a double deduction. If you then say for those double deduction, and then required to give them an invoice because they didn't provide TIN, is reasonable to me. But for everybody, is FRS going to then grant someone credit based on a receipt that I've issued to the person? Because filing is done on Tax Pro Max. Is there a place the withholding tax credit I want to utilize is already on Tax Pro Max? So is FRS going to take manual receipts and go and upload on the portal? I don't see a use for that provision. I don't know what they were thinking. I sincerely, it just doesn't cut it for me in any way. I've tried to look at it from all angles. There's no need for it. There's no use for it. And everybody's trying to sell one AI tool or the other now to say, oh, come, we'll automate your processes for you. Hey, so
Okay,
that's where Emmanuel
okay.
is.
Taiwo, maybe we can backtrack, and I think maybe this is where we'll be wrapping it up. If you can take some transfer pricing question, I know it's back, for time, but I think this conversation is actually very needed. When I was looking at the regulation, I initially was engaging and asking her that is it only when you have remitted the withholding tax that you are required to issue, receipt. But I realized that, it is only once you have deducted, you understand, whether you have remitted or not, you are then required to issue a receipt to the person. For me, I think what they are trying to achieve with that is to say that, it is the responsibility of the tax authority to ensure that the company remits. So if a vendor has suffered deduction, the vendor should be able to enjoy the benefit of suffering that deduction. Do you understand? Notwithstanding
How
the
does
fact
it
that
they enjoy the benefit? A manual credit note.
with the receipt that you give to that person, maybe upon filing and all that. So these are
Filing is
areas
done
that
online.
we will be needing some additional clarity. And I agree with you, the administrative burden and additional compliance costs that will bring on businesses will definitely be a lot. Somebody will definitely need to sell a software to handle your 1,000 vendors for you. But I think Edmond has something to say on that also. From your hand, what are you seeing with this withholding tax requirement?
Again, I don't also understand the reasoning for it, but maybe probably this is not the target, is not the FRS and maybe LRS that is a bit well structured, have systems. Maybe probably the target are other state internal revenue services where they don't really have a structure to manage this credit system. Maybe, but I don't really know, because like you said, for FRS, for example, for you to claim credit, withholding tax credit, it has to be what is already on your tax promise. So whatever it is that is the receipt, then it's useless. Maybe probably this is also in a way to know those that are not remitting. You are issuing this receipt to the vendor at the point where you are deducting from them. So if as a vendor, I go to my tax promise and I'm seeing only 10 million and the volume of receipts with me is maybe probably about 30 million, then there is a disconnect. Maybe this can also be for a trigger for FRS to really go after those that are not remitting. Right?
And in fact, it's a trigger even for the vendor to follow up with the service recipient who has deducted this withholding tax. Because what they had experienced in the past is somebody had rendered service, withholding taxes have been deducted, then they walk out to the tax office, they want a credit note or the withholding tax receipt, but we are not even seeing any remittance from that service recipient who had actually deducted withholding tax. Now, we are taking that vendor through the burden of going to the tax office. But now we're trying to simplify the process. You need to get things done between yourself and your service recipient. If you have been issued a receipt, you go to your tax portal, you are not seeing a credit in that instance, then you should be able to follow up on your service recipient as to ensure that, okay, they make such remittance. And that's why also the law also requested them that once you have made that deduction in your monthly return, do a schedule also of all the receipts you have issued, so that there can also be a tie. There's always a check and balance in that instance to be able for us to verify what has been done.
Anu, over to you. Are you able to speak?
Sorry, just one last thought, right?
Okay, we can't hear.
Can you hear me? Okay, so
Yes, we
one
can.
last thought on this withholding tax thing,
Yeah, we
because
can hear
for me,
you. Montaiwo
I
has the
took
last
it
thought
deeply
on this.
personal.
Okay.
I took it deeply personal because if everybody treats withholding tax like cash, right? The same way I would follow up with my customers for my withholding, for my money when I sell on credit, or when for them to pay, is the same way I would follow up until I see my withholding tax on the portal. So even if I have paid, I'm saying this because, okay, so there was an instance last year. We remitted withholding tax. We uploaded the schedule. However, it wasn't reflecting on Tax Pro Max, and some of our vendors were reaching out. We then reached out to FRS to say, we made these payments. The payment was showing that we paid this. But when you click on view uploaded schedule, it wasn't showing. So they didn't get credits, even though I had paid. But they were following up with me. They were not following up with the revenue authority, because I'm supposed to give them evidence that I've remitted. And normally when they come to me, I say, have you checked your Tax Pro Max? If they go there, they'll find it. If somebody is doing a reconciliation, from the customers, from the vendor's end on a monthly basis, they would see it. And then we had to then reach out and provided the schedule to FRS backend. It was not until they uploaded it that everybody was able to get credit. So manual, if it's for reconciliation purpose, we don't need to issue a receipt, because you follow up to collect receipts. Then you still go and follow up again to check. You will still check if it's on Tax Pro Max. You already know how much you received. You already know that there's an outstanding on the invoice that you have issued. Then check Tax Pro Max to reconcile and identify the people that have not yet remitted, and then follow up with those people. Not necessarily issuing this thing, but at the end of the day, that's my personal opinion. The law says issue receipts. So go ahead and issue receipts.
And just like as Emmanuel has said, the tax system, yes, as we have it in Lagos, in some other cities or states may be advanced, but when you go to some other states also, taxpayers have different peculiarities. But the law is actually supposed to be umbrella enough to accommodate everybody. So yes, I
ATB
understand your
should bring
concern.
everybody together and let them all pay for the use of these softwares and enjoy
Okay,
it.
I know we've hijacked this conversation from you. Bear with us. We are wrapping up already. Okay, there's a question here that actually provoked thought. And the person is asking, will the register also be required to issue receipt on the withholding tax deducted on all the dividends paid? And those are some of the administrative issues that will definitely come up, with this provision. For me, it may be comforting if FRS has said, once you show me your receipt, whether the taxpayer has remitted or not, I will recognize your withholding tax. Then I can see that as a benefit. I can see it as a benefit, because if FRS won't recognize it, then why the additional administrative burden? But I believe that over time, better clarification will come on this. Over to you, Anu. I think she wants to raise a last comment on advanced pricing agreement. Recently, the guidelines for the implementation, was issued, and we are hoping to see that. We would like to hear from Mr. Oye, what is the temperature like when it comes to embracing this new introduction?
Okay, talking about the temperature for the advanced pricing agreement, you had punched us earlier to say that yes, when we start.
How are taxpayers responding? Yeah.
Okay, so we expect response from the taxpayer as much as possible, because it's a mutually beneficial process or a mutually beneficial program. In as much as it's beneficial to the tax authorities, actually also beneficial, extremely beneficial to the taxpayer. For instance, you now have certainty as to the treatment of your tax issues. You can predict, you can avoid disputes, because once everything has been agreed, because this is more like you doing a transfer pricing audit, but well ahead of time. It's an ex-ante thing rather than the ex-post thing that we usually have. So once you have agreed to the terms as to how you're going to price your control transaction, and this has been concluded, then nobody will bother you with a transfer pricing audit. Rather, what we'll just be requesting of you is just like an annual compliance report to actually show that you you are complying with the requirement or the agreed terms and the critical assumptions that have actually been taken in before the agreement of the term. So we expect taxpayers to yield because, like you had rightly said, even right before we took off in 2013, taxpayers had already started applying, even though there was no guideline then. So now, how much more now that we now have a guideline that has specified how things should be done. So we expect more applications to be coming in, and in fact, people are reaching out already as to how to go about it. And the guideline is clear. The APA guideline as issued last year is clear. Applications should be directed to the competent authority department, and every other conversations will follow thereafter.
Okay, thank you very much. I know, are you still there? I can't see her. Let's take this last question. I want to direct it to Taiwo. You know, there's a question here, and the audience is asking that I'm a small company and the withholding tax regulation exempts me from deducting withholding tax if my revenue is less than 25 million. You know, I am not sure at the beginning of the year whether I will cross that threshold. How am I expected to comply with this provision? Hello, Taiwo.
Hello?
Taiwo, are you there? Yeah,
Yes,
we
I
can
was
hear you
here.
now.
Oh, okay, please, can you ask
Did
the
you
question
get
again?
the
Sorry.
question?
No, I didn't get. My network was acting
Okay.
up. Can you just take it again?
Okay. So the question from the audience, you know, I'm a small business and my revenue threshold is still less than 25 million. The withholding tax regulation, you know, says I don't have the obligation to deduct withholding tax, you know, because of my revenue threshold. And I'm not sure whether I'm going to exceed that threshold. How am I supposed to comply with that requirement?
You comply until you cross the threshold.
Until your revenue crosses the
Crosses,
threshold in the
and
course
then
of the
you know
year.
small company is now extending to 50 million now. So
According to
well, till we see the
tax reform
final.
bills.
Yes. So
The tax reform bills. Okay, thank you for that response. Over to you, Anu. Let's take our final comment from our panelists, and that will be all for today.
so as far until you cross the threshold, so you continue to.
Thank you so much. So thank you. I believe you can hear me. Can we hear me, please?
We
Okay,
can
my
hear you.
apologies.
Yes,
The
we can hear
network,
you.
it seems the network is beginning to see sunlight. So yeah, maybe the sun is affecting the network. Okay. So thank you so much, our panelists. We have one or two questions here, but we believe that they have been answered by reason of our comment that we had initially. So somebody asked if the rent relief is an additional relief to the consolidated relief allowance or substituting it. So based on the provisions of the tax reform is for the CRA to exit while the rent relief and then every other relief that will be associated with PIT be brought into the room. That's just a literal description of what we'll be having. So you're not going to be having the rent relief, sorry, and also the CRA alongside based on what we currently have with the reform. So somebody also asked that
just to help you again, there will be a relief of up to 800,000. So that 800,000 will be the general CRA for everybody now. So there is no longer CRA. Yeah?
Okay, thank you so much, Edmund. I think somebody also asked in relation to withholding tax, how the company is supposed to know if it should advise its customer to either deduct or not deduct. And this is another contentious issue that companies are facing. So I would just appreciate if they could, touch on it because companies need to know when they are meant to, deduct or when they are not deducting. So I'll be directing that question to Emmanuel. So
I will just responded to that.
Oh, okay. Oh, I'm so
I will
sorry.
not
I think
respond
my network was out. Oh, I'm so sorry. Okay, then thank you so much. I didn't get that. Okay, thank you so much.
In
So
fact, I think that you can enjoy that deduction all year round because you will not know the turnover until the end of the year. You use the prior year now. to place yourself. But
Yeah,
really,
so there's
the
a
moment you
school,
cross the
there's a school of
threshold,
thought
sha,
that says you use
Just
your
as you
prior
have said,
year. Yeah.
your prior year also impacts your prior year.
No, because you may be thinking that you cross the 25 million threshold and your auditor says no. What you call revenue is not revenue. Then you are back.
yes.
So
But
maybe another school of thought is to work with your prior year revenue as a guide for the current year.
Thank you so much to all our panelists, to Edmond, to Taiwo, to Ekomi, to Emmanuel. We are so grateful that this discussion helped us to realize and to put to our face the impact that this reform should be bringing and practical ways we can position ourselves, our businesses to ensure compliance. So I know that it's amazing how questions are running in. Let me use that word. 5 minutes to time. So would appreciate if you could scan the QR code that will be displaying very soon so that all these questions will be attended to. We do not intend to leave any more question unattended to. So please scan the QR code that will be displayed on the screen. Yes, I believe it's being displayed right now. Please scan that QR code and you can drop your questions. You can don't worry, even after the this webinar session, you can still drop your question and they will be duly attended to. Thank you so much. So we're leaving the QR code on the screen for a while so that everyone can get to scan. And of course, you could also go through our website, Cardinal Professional Services, their newsletters, their publications, articles therein that you could benefit from, and as well as our LinkedIn page. There's a plethora of information that would impact us as taxpayers that you would of course benefit from. So I want to continue saying thank you to our panelists, but I know if I keep on doing that, I would exhaust the remaining 5 minutes that I have to keep on moderating this webinar. So I would rather give the floor to our panelists, starting with Edmond, to Oyekomi, Taiwo, and then Emmanuel. So please give us their closing statements on the same issue. Thank you so much.
From my side, they said generally that in life, two things are certain: debt
Yeah.
and taxes. So if taxes is certain, then you really need to make sure that you prepare. So both as an individual or as someone who is responsible for tax management for your company, do everything possible to make sure that you are prepared for every change that is happening in the tax landscape in Nigeria now.
Thank you so much. Thank you so much, Edmond.
okay, so like you have rightly said earlier, we need to be aware of the fact that this has come to stay, except that there could be some little modifications. But the beautiful thing about this whole tax reform is going to help our economy to recover. At the same time, help us to balance our fiscal sustainability. We're able to get at least more revenue on the higher side, while businesses also are not being exposed unduly to taxes. So growth is achieved without them being exposed, because now we're experiencing a reduced tax rate with further incentives. So it's important that businesses actually are aware of some of these changes, do the impact of some of these changes on your business, and also engage professionals where they may be needed to actually support you to take advantage of this process.
Thank you so much.
Hello, Anna?
Yes, we can hear you.
Oh, okay. So, before
Hello?
I just take the closing remark, there's a question on the comment box where someone was saying that there's a threshold for non-deduction of withholding tax of up to 2 million naira. That's not applicable to large companies. That's for small companies. Okay. So, on closing remark, can you hear me? Sorry.
Yes, we
Okay.
can hear you.
Okay,
Yes,
thank you.
we
So on
can.
closing remark, really, okay, I thought that we're going to get to the point where we'll talk about tax audits, closure of tax audits especially. And well, maybe the next one that we have, we're going to actually talk about that. Because I was looking forward to the bill, mandating closure of audits, if the FIRS or the Revenue Authority does not respond. Because sometimes you'd write a objection letter, you submit your undisputed position, and then you don't hear anything for the next 1 year, for the next 2 years. You know, I was hoping that there'll be something in the law that then says, oh, if you don't get FIRS's response within 90 days, you know, and your own undisputed position becomes final and conclusive. The same way, if I don't object to an assessment in 30 days, you know, it becomes final and conclusive. But maybe Finance Acts will bring that, you know, on board. You know, I'm really looking forward to something like that. But the changes that we have, they're welcome. They're still the gray areas. But what I would just say is that if you have any gray area, you know, the cost of non-compliance is a lot, because if you have a position and then you're trying to take a position on, oh, should I tax this? Should I not tax this? Please seek expert opinion and be sure, because in 3 years, that liability that you're trying to check whether he's liable or he's not, in the event that he's liable, in 3 years, it becomes double because of the annual rate, you know, that FRS is using, which now even extends to self-assessment CIT. So it doesn't matter. So, and then they may not come for the audit immediately. So they're coming for audit 3 years later. That position that you're trying to analyze whether is liable or whether this expense is it deductible, what position are we going to take? Seek expert opinion, analyze the implication of your decision before you go ahead. Because if you don't pay the tax and it's actually due, you would pay penalty on the side, but the interest itself, you know, is something that is really, really high, and you need to pay attention to it. So that's it from me. Thank you.
Thank you so much, Taiwo. Thank you.
Thank you. Thank you.
Okay.
Okay. Can I go ahead?
Yes, we can.
Okay, I think Oye and Taiwo just summarize my final thoughts, you know. And I think as a business or as a taxpayer in this environment, it is high time that we get more interested in, you know, taxes. You know, one of the things that is not done very well in our secondary education, and if you don't get to study finance in the university, you know, you may have poor implication or poor inclination about taxes. And the fact remains that taxes impact your standard of living or your livelihood, as the case may be. You understand, as a business, as an individual, I think these changes are coming to, you know, to modify the environment. You need to be proactive enough to know how it's going to, in fact, impact you, impact your family, impact your business. And where you don't have clarity, you seek expert opinion on how to navigate it. I think a number of large business corporations are already doing impact assessment, you know, impact assessment to communicate with their stakeholders and investors on what the environment will look like in the future. It is not so much of a big deal. Even as a small business, you can adopt something similar within your scale. Look at all the proposals, get expert opinion where you can afford it to know exactly what you will be dealing with, you know, when the reforms are fully matured and the tax reform bills are centered. I think that's what makes for agility, you know, as a business or as an individual in the environment. So for you to remain agile as a business, you know, you need to stay proactive. Thank you.
Okay, thank you so much. Thank you to all our panelists. I see somebody thinking that, oh, everyone is saying that reach out to experts, reach out to experts. Yes, tax consultants, you know, your financial advisors. I mean, that's one of the reasons why we are here, so that you are aware of, you know, what is in, you know, the impact of the reforms that we are currently having. So I think finally, I would just like to add that, yes, it's been a privilege to moderate this, you know, this webinar session, and to remind all our participants that, you know, everything we have spoken, you know, to today, the sections of the reforms that we have touched, that is not the, you know, the bulk of the reforms. There are a lot of things that, you know, we have not also touched on the reform. For example, the impact of these provisions, even on consultants, even on, you know, to the financial advisories, the optimization of, you know, AI to tax payment and tax collection, basically, and you know, the plethora of things that had been raised in the reform. So I would, you know, join the panelists to advise us to ensure that we are well informed, we are well educated on this provision so that we can take a proactive approach and not, a reactive approach to the impact of the reform. So at this section, I would like to once again appreciate our panelists, and also appreciate every participant that started this session with us, and we are still here, and even those that were not able to, maybe for any reason, complete the session with us. And yes, you can see this video on our YouTube page. That's why we wanted you to scan. We are still open that, if you have not scanned, scan the QR code so that you could go on our YouTube page to watch this session. Thank you so much, everyone. And this will be the end of this webinar session from my side. Once again, we are Cardinal Professional Services, LLP, and you can always, check on our publications and newsletters and every of our educative and informative article or maybe publications on any of our social media platforms. Thank you so much. Okay, I think Emmanuel has left the call. I don't know if he has something to add to, but I think he just left the call. So our panelists, thank you so much. We are
Thank
very
you.
grateful.
Thank you,
Thank you,
everyone.
Anu. Great job.
Thank you,
Well
everyone.
done.
Thank you.
All right. Thank you, everyone.
Edmond, Taiwo,
Thank you.
bye.
Thank you.
Thank you. Bye-bye.
Mother,
Thank you.
bye.
Bye.
Thank you.
Mm.